All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market opened up this morning, a little higher, has been reversing pretty much all day. We've had Larry Kudlow on CNBC talking about the U.S.-China trade relations and basically throwing some cold water on some of the hopes that were, instilled in that a little bit last night. And we've seen kind of the market react accordingly, and the market pretty much back to where it was, a little bit lower than where it was when it opened on Wednesday and where it was last night after the Apple earnings. And so, we're dealing with an S&P that looks like this, and that's a big, fat, bearish engulfing candle on the S&P here so far today. And in fact, if you look at right back here, after that rally, big fat bearish engulfing, we saw, equity markets fall off sharply after that in the next 2 days. We can go back and look at a lot of bearish engulfings where, the market's actually gone higher afterwards. But this one is is definitely notable. Is definitely something to respect. And you've heard me beat the same drum all week as far as look. Yes, this rally has been enough in terms of the internals and the metrics for me to say, hey, look, I do believe bottoms are in for different stocks. I do believe I can go buy a Caterpillar. I do believe I can go buy a JPM. But if I'm going to go buy the options, I need to buy on a higher low for two reasons. Number one, it sets up a better risk-reward scenario. And number two, the option values will have bled down. The implied volatility will have come out to some degree that's better than where it was even yesterday. Having those two factors will increase the probability of trade success and, gains. Look, this is something where I'm being as patient as I am right here, simply for a regret of mine. And, when I go back and look at my notes for the challenge back here, February, March, April, I wasn't patient with the challenge. I just wasn't patient enough. I was patient enough personally and really made out like a bandit. But with the challenge, I just wasn't patient enough. And, so you could argue, yes, am I erring on the side of overpatience? Yeah, probably. But I also know that when we get the right setup and the right option value, to take the 3,000 cash that I have and take that up to 10,000 can happen in two trades. It can happen very, very quickly. To go from 10 to 30 can happen in the next two trades. It can happen very fast when we get these environments. And that's what I'm looking for. And so I don't want to, I want to make sure I still have that 3,000 cash. And you know what? The rest I've put into Adobe. And I've been patient with Adobe and letting it tick and uptick and down tick, and it's up more it's down more, and then up a little, and all around, but still sitting here around this 240 level. I have the 250 strike price, so I'm not far out of the money here with it. And yes, if the market melts down and Adobe melts down, I'm out. Of Adobe. I have my 3,000 in cash and can go and still do very well with it. But Adobe is one that I still look at. Call me crazy, but I still think there's some serious profit potential right here. And in fact, in this video, we'll come and take a look at Adobe because this video, I want to go out and take a look at mapping trade entries here with you. And I'm speaking towards challenge trades. I'm not talking about investments. I'm not talking about day trading, weekly options. I'm talking about the way I approach things for the challenge. And so we'll take a look at a few stocks. Take a look at Boeing, Adobe, JPM, UNH, Caterpillar, and Nike, and we'll go map these out. And again, this is just going to be technical in terms of charting, and let's get to it. Here's Boeing. Boeing triggered bullish on Katie yesterday, right? And, I got, why don't you get in, Jeff? Well, there's some things, yes, it turned bullish, great. And all that told me is kind of my suspicion with other things. This move is nice. This move is strong. It indicates that the odds of a trend afterwards are very high. but trends have highs and lows and ebbs and flows. And, to see a pullback into a higher low is where I'm comfortable, right? And not just getting a signal and saying, oh, let's go, and buying an overpriced option in a market that is, with the characteristics that this one has. And so, all right, Boeing, I do want to get in. I look at this move and I go, wow, that's quite the move, in terms of price action. It's going to end up with quite the volume here overall. So what do I want to see to get in? Well, number one, and you're going to see this consistently when it comes to the rest of the stocks that we look at, I want to see a retracement of the rally. I want to see a retracement. Now, I'm going to just zoom in, or I'm going to actually, let's clean this up, get rid of our indicators, and just zoom into a 1-hour chart. And what do I mean by a retracement of the rally? Well, I'm going to put on a Fibonacci retracement. Now, there's nothing magical about these. There's nothing that says because it goes to one level or another, it's going to do X, Y, and Z. But Fibonacci retracements give a zone for support, the expected area of bounce. Okay? And so what happens is I go, okay, I want to buy Boeing. Well, it's at 362. What do I do? 361. What do I do? 360. What do I do? No, I don't have to answer those questions. I don't have to drive myself insane like that. We come back into the retracement area, anywhere in the zone. I don't care which area it is. I don't care if it's 50%, 38%, 62%. I just don't care. This basically tells me when we get back in here, all right, Jeff, look for your opportunity to get in. And so, yes, we have a dip today. And yes, I'm liking that Boeing is dipping a little bit. I'm very appreciative instead of running away from me. But where do I start to question and say, all right, do I get in now? Is it done dipping? Do I jump in now? Well, for me, it's about retracing this rally. Look, I mean, Boeing's going from 330 to 370 between everything this week, right? An upgrade, other things happen. To see it come back into this retracement zone, that would be a more normalized type of move. And when we go and look at JP Morgan, UNH, or JP Morgan, Caterpillar, Nike, it'll be something very similar. So I'm not looking at buying Boeing here today, right? Unless it comes back into this area. Now, once we get back into this area, what do I want to see? Maybe what do I want to see? Well, for me, it becomes very simple. I just want to see a gap above the 7-hour moving average. Right? Just give me a gap above the 7-hour moving average. That would be ideal. That would be the easiest. But they don't always play out that way, right? They don't always say, oh, okay, we're just going to close at the low and gap up the next day just a little bit so you have plenty of time to get in. And Jeff, we're gonna make this pretty and easy for you, and we're just going to do exactly what you want to see, right? So I know ideally I would like to see, all right, come down to 350, close on the low, and Monday gap up to 353. Stay there for the first 5-10 minutes while the options open up. Maybe dip a buck. Let me click buy. And then you can go up. Never tick back lower, right? Unfortunately, the markets don't work that way, that easily. And so I, can't expect that I'll get that. But that's what I'm looking for to say, all right, this is kind of a very high probability time to get in. And time to go, right? Time to jump and get aggressive. But I also realize that other things could happen in this level. What are some of those other things that could happen? Well, sometimes we get a reversal where we get this kind of gap down and reverse higher, right? In the retracement area. We get that. willing to assess that and take a look and say, all right, now does that give me a good risk-reward scenario? Sometimes we get an indicator that, becomes oversold. One of my favorite in these types of situations is the Commodity Channel Index, CCI. Right? If it were to become oversold, all right, I'm a lot more interested. Sometimes we'll see something like a stochastics where we can start to look and say something building here. Something else is happening here. A stochastics, all it's going to do is show me whether the price of the stock is high or low relative to the last 14 days, or in this period, in this context, the last 14 hours. So if we start to dip and we come into the retracement area and the stochastic starts to go from under 20 to above 20, all right, I probably have a decent buy opportunity there, or an area where I can start to say, hey, I can put together something with a decent risk reward. And so with Boeing, I need one, for it to get into the retracements. And then number two, to give me something to say, all right, here we go. And there's a variety of things that I look for. I have my ideal, but there are other things where, yeah, the odds aren't as high when they happen, but I may not get my ideal. I may just get, kind of more mediocre and with one of the other indicators. And these are some that that I look for. Okay, in fact, these are the most common here that I look for. Yep, there's this gap here that might act as support, resistance. Great, fine, right? It might, it might. But bottom line, I know right here, right now, it is not pulled back enough for me to get in, for me to say, hey, you know what? I'm very comfortable buying right here. I think the odds are strongly in my favor. It's still too early. So, yeah, great. Out of the corner of my eye, more of a, hey, you know what? We'll see where it comes on Monday. Let's go with Adobe. Here's Adobe. Now, forget the fact that I'm in a position, okay? Which I know. The position's down and all of that. Great. I would like to add to Adobe when the time is right. And here's the hourly chart. We don't have a similar, Boeing type scenario here. Adobe didn't sell off into new lows in a big way the way that Boeing did. Boeing's a little bit of Adobe has a little bit of a different chart here. And it's been kind of creating this channel environment, okay? Now, whenever we have a channel environment, one of the things that we will often see is one of two things. Either what we saw back here in September, where the lower end of the channel breaks, and then we get a quick snapback. All right, channel's ready to go. Or we will get a channel that kind of comes into the midpoint and bounces off that midpoint and says, all right, let's go. So this is a very tempting area for me to say, hey, you know what? Maybe I should add some more right here. This is also the 200-day moving average on the daily chart. So I'm watching Adobe here today and going, man, this is really, really nice as far as a level. Do I have any confirmation that it's ready to move and ready to move higher? I don't, right? I don't. That's what I'm missing. And I know in this environment what can happen. Well, I can wake up Monday morning, there's some trade war news, and boom, here we go. We're at the bottom of the channel. And now we're dealing with a scenario where it's exaggerating the channel and snapping on back, and now, okay, I can trade that, fine. But, I'd much rather be buying here than holding through here. And so with Adobe, I go, okay, here we are with the channel. Here we are with the midpoint of the channel. And again, my lines are not drawn perfectly, but, lines on a chart are, never exacting. What would have to happen to say, all right, this thing's ready to go? But when it comes to channels, 3 points. It takes 3 points to make a channel, right? So you take a look at the 3 points that make the channel, and yeah, you have a 4th point right here with today's. But I'm going to back up one. I'm not going to use today's. But if we look at yesterday's high, 248.5, rallies and breaks that point, we now know we have a broken channel. Here we are back here, right? Rallies, it breaks this point right here. We now know we have a broken channel. Are we going to get the bottom? No, we're not, right? But we can get some confirmation, channel's broken, and the probability is that it's ready to go. So I look at this 248.5 level, and I go, okay, you know, this would be a very interesting level, given everything that's going on, or gone on. Now, this would be a very interesting level to add more if I would like. Now, I think realistically, and I go, okay, with everything that else has transpired in the market this week, if Adobe does this, well, chances are I'll probably have a buy signal on another name that I'll have a Boeing or a Caterpillar or a Nike doing what I want them to do. So do I go buy more Adobe, or do I go, you know, diversify? I hate that. I forget that. I didn't even use that word. Do I go put my money in another position and run with 2 positions rather than 1? Right? That'll be the question, most likely. Now it could be, you know, maybe Adobe just, you know, goes on its own, does its own thing, but you know, chances of that happening are very slim. But as far as Adobe goes, 248.5, boom, it's ready to go. You know, to me, that is the hey, let's go and add more point of that name. JP Morgan, which this week gave price action that to me suggests it wants to go higher. Okay, now JP Morgan's really interesting, and technicians love symmetry, right? Technicians love chart symmetry. Take a look over here. Oh, little shoulder, right? Ah, little head action right here. Man, we got a head and shoulder pattern shaping up. Okay. Well, let's see if we can find a little more symmetry. One of the things that will happen in head and shoulders patterns is typically the second part of the you know, what they would call the head, or this U-shaped dip, we come down into retracement levels. Oftentimes, we'll come back to the lows of the prior shoulder. Wow. That is, you know, that's right on the final retracement level. Right? And you say, okay, JP Morgan gets down here. It's going to be hard to pass up, right? I mean, really tough to pass up. And I just go back to the Boeing scenario and go, okay, we get down here. All right, I'll take a look at the CCI. I'll take a look at gap above 7-hour moving average. Take a look at the stochastics. All right, do I get confirmation it's ready to move? And if I do, great, go. But one of the things that could also happen is, let's just say JP Morgan has come to its retracement, and it just goes higher from here. We would get a slanted shoulder. Well, generally, these are much more bullish. So I'd want to get in. So what do I look for? Stochastics, CCI, move above the 7. I don't need JP Morgan to come down here to get in. I'm willing to get into JP Morgan on the next piece of hourly action. It's not happening yet. But if we scroll down to the stochastics, could we see the stochastics come Monday morning, start to curl and move back above 20? We sure could. Could we wake up Monday morning and see JP Morgan down here at 106 and the CCI down here minus 300? We sure could. JP Morgan is, to me, a lot closer than something like a Boeing. But some of the principles are very similar in terms of what I'm looking for. Let's go to UNH. United Healthcare. UNH, it set a bullish Katie signal this week. gapped on up today, pulling on back today, right? It's flat on the day. All right. Well, take a look. UNH had this channel action, right? Again, not exactly perfect lines there. My mouse drawing skills are pretty limited. But what do we know about channels sometimes? Well, they'll break and they'll come and retest the channel and then they'll bounce off that level. Okay. All right, that sometimes happens. Let's just say we're going to look for that. Would that be a retracement? Yeah. I mean, it would be a retracement right back here to the, 200, 250, 258 level. And I have not done a training on Fibonacci time sequences in a long time. Fibonacci arcs. Maybe we ought to do that next week. But now we have nice little kind of pullback into the 50% retracement today. If we go for another day, we'd probably come back into this full-on retracement. Well, what would that be? That would be the lower side of the channel, right? That would be the lower side of the channel. That 258 level, man, it's going to be a very tempting level to want to get in. So if I look at UNH, what do I want to see? Gap above the 7 hours, some sort of stochastics action, or oversold CCI. Same thing as Boeing, same thing as JP Morgan, but not quite there yet. Right? Not quite there yet. Let's go to Caterpillar. You'll see a recurring theme. All right, love the move. Love the move this week. I think this move this week is serious. I think it matters. Let's retrace the move. Are we anywhere close to the retracements of the move? Not even close. Not even close. So if Caterpillar gaps up on Monday, and am I willing to get in? No. Gaps above the 7? No, I'm not willing to get in. All right. I need more of a retracement for me to be willing to get in, for me to be willing to trade it. So not as close as something like a JP Morgan, or excuse me, a UNH, right? And then last but not least, Nike. Here's Nike. Love the move that we've had on Nike. I'm very bullish on Nike. And here we go. We're starting to pull on back. Where do we pull on back? Well, let's throw the retracements here. We're almost to the first retracement, right? We're almost there. Should I start looking? Yeah, I'm starting to watch, right? But I don't have any of the other things that I want to see to say, okay, get in. But all of these stocks, Boeing, Adobe, JP Morgan, UNH, Caterpillar, Nike, we're finally getting a little bit of pullback. That pullback can still happen. But what am I looking for to get in? Well, it's something very simple, and it's one of 3 or 4 of these 3 things. There's probably 2 other things that could happen that may prompt me to get in. But overall, some are starting to get to levels, others aren't. And with a lot of the stocks out there, we can do this same thing. I look at some of the stocks on my watch list and I go, okay, you know what, Jeff, you'd like to buy some Micron, right? You'd love to get into some Micron. Okay, well, here we are. Have we retraced yet? No, we haven't even come close to retracing it. So, it's just not where I want to buy it. Is it a nice signal that it's given this week? Do I expect it to go higher? Yes and yes, but where's my higher low? Where's my higher low? And I want the higher lows. And, there will be some stocks that give them and some stocks that don't. And I'm pretty confident that some of these names we've talked about here today will absolutely give them. But what's the danger, right? What's the danger? I go, okay, you know what? I want to buy Boeing on a higher low. Well, you know what? What if instead of me getting a higher low, we're just talking about lower highs and lower lows to come in, right? What if that's ultimately what we're talking about? That's a danger out there, right? Any market, no matter what. There is that danger. There is that possibility of happening. And I have to be aware of that. I have to be on guard for that. Now, with the challenge, am I going to be as on guard to it? Probably not. It's the challenge. You know, let's go. Yeah, there's a million things that could happen, but all right, does what I want, go. But that danger is there. That risk factor is there. That's not going to go away. And we could name 100 different things that could make it do that, right? That could make lower lows come in all over the place. Is that the probable scenario given the price action we've seen? No, it's not the probable scenario. But we know that things can unfold on a geopolitical standpoint, that in the short term it can create some other and different type of action. You'll notice I'm not applying or even looking at something like this for Apple yet, right? It's still having its earnings reaction. I mean, there's nothing here for me to apply or, you know, even look for a higher low to come in yet. Well, as we get into the end of next week, yeah, I'll start looking at Apple and saying, all right, what do I want to see to get long? What do I want to see to get short? And if we get one of those scenarios, look to take advantage of it. But so far, just don't have it, right? We're too close to the earnings for me to really, really do that. Exxon, same type of situation, right? Same type of scenario. And yeah, I think Exxon goes higher. I think Exxon goes higher. I think it goes higher. I think it goes much, much higher. I think U.S. Steel goes higher. I think it goes much, much higher. But both of these stocks, I need to see them play out here, you know, just a little bit. Need to see the earnings reaction kind of settle out of them before doing anything here with them. Nucor, after seeing Nucor earnings, after seeing U.S. Steel earnings, I'm willing to put Nucor on my watch list for the challenge and look to trade it. It'll be a little more tame than something like a U.S. Steel, but this is something where I'll also want to see a higher low come into play. You say, Jeff, well, why don't we just short these moves, right? We have bearish engulfings. Let's just go short them right here. You know, most of the things I'm looking for, like a Boeing, I'm looking for it to, come back a little further, back into, further retracements. And yes, you could go short it, great. And you could use today's high as a stopping area. I couldn't argue with it. But for me, the option's too expensive for it. And the risk-reward area, right? If I'm wrong, let's just say Monday it gaps up to 364. What do? I'm nowhere near my high. My put option will get hammered because the stock's going $4 against me and the implied volatility is going out. The option will just absolutely get hammered. I'm not willing to add to that risk just yet with the candles that we see here today, at least so far. I mentioned Pepsi this morning as my favorite as far as triggering an entry. It fell off. It was down about $1.80. Just kept running, broke 110. Is snapping back here. So I'll take a look at it. But it's moved a little more than what I want to get in here today to have a great risk reward, or what I would say is a fantastic risk reward. But we'll see how she closes, how things play out here into the close of the market. But, this may be one of those market closes here today where we might see multiple 20-point moves, up and down as we go into the close, given the overall temperament of the market here this week. The market metrics here today, they've not turned. We haven't seen a big switch in the market vibe here today. It was a 0 yesterday, but you can see the market's down today, but the bullish percent index is actually moving on up, right? We have more stocks starting to give bull signals than stocks switching into bear signals, even though the market's had a pretty sizable reversal in it. We don't see, if we come in and just look at some of the sector stacking here today and, how they are, we have consumer discretionary leading the way, industrials leading the way, financials leading the way. Yeah, here's utilities and staples, but, they're down today. They're down. We're not seeing a big safety move here today. Yes, tech is getting ripped because of Apple. And look, tech would be up 2% if, Apple's earnings were bought up instead of sold off. But overall, we're not seeing a real bearish tilt even to, the intraday sector summary. If we look at the 1 week sector summary and we look at what this week was, you see utilities on the bottom. Right? Utilities on the bottom, and we see consumers, materials, consumer discretionary, the more aggressive consumer, not consumer staples, financials, communication, industrials, all leading the way here this week. That's a very positive stack for the week, and it's different than what we've been seeing. If we come to a 1 month, right, we have consumer staples on top, utilities on top, real estate. We had the bearish safety sectors on top, and the industrials and tech and materials on the bottom. So this week is remarkably different from what we have seen over the past month. And I think there's something to that. I really think there's something to that. But in terms of short-term option buying and saying, all right, let me get aggressive with my cash, I want to see a little bit more. I want to see some of those things that we talked about here in this video. And I expect that we will see them, probably not today. Probably not today, but early Monday, late Monday, early Tuesday. I think there's a really good chance that we see them. And yes, there's a big bad bearish engulfing in the market, but I guess the word I don't care shouldn't come into play, but I don't read too much into it. When you look at the history of bearish engulfings over the last 3 years, you can make a very interesting argument that bearish engulfing should be bought, not sold. Now, it's not a high probability argument. It's about a 50-50 mix. And basically what that tells me is it's not really a metric to pay much attention to. It's not something to really factor in when it comes to things. And I know if the market goes down, yes, the bears will look at that bearish engulfing. Look, and we just went down, 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 right? But I don't think in real time that is something that makes any sense to do right here. Thanks for hopping on. Have yourselves a good one, and we'll talk to you later. Take care.